Welcome to TradeTheNBI.com. This is John. This report is for the 12th of November, the day after Armistice 100 years ago. The war to end all wars, which really turned out not to be the case. But what we did note was for the report for Friday morning, we were talking about how, hey, we had all the clear indications that if selling started, it would be a little bit more significant. And sure enough, we came right to the 50% dip below it. Hit exactly, well, did we hit it exactly, or we were pretty close? 64.50, so 2 points off of where the old algo was, and that caught some support at that point and closed above the 50%, which is right where they're holding. So that just filled back in a big chunk of the up move, which is healthy. No complaints with that at all. Also caused a little bit more of a steel reset. Not great readings from a buy standpoint, but the interesting thing of having the orange reject off of the steel at this particular point would be critical, because that would cause the orange to come back down for a new buy configuration, which would not be completely unexpected, since this kind of little movement well within the expectations of what we were seeing. NASDAQ almost identical. And of course the euro coming on the heels of the French President Macron saying basically that they need an EU army to defend against America, while standing in front of the graves of all those who fought there. That was quite interesting. I don't know that that's why the euro is falling. I think the euro is falling for its own reasons that are very specific. The fact that the U.S. economy continues to outpace the rest of the world, and the EU getting left in the dust on that is only going to mean the euro needs to fall in order to balance that out, because otherwise it doesn't make any sense. Speaking of doesn't make any sense, Treasury is rising back above that 113 level. Clearly the Fed has indicated that it's going to continue to raise rates and not stop, regardless of the fact there's not really an inflationary concern. So this should be going much lower, faster. But when you have market down days, obviously people want to put their money in safe havens, and that usually causes a bounce there, irrespective of the underlying fundamentals. And of course, the plummet in oil means that obviously gold, commodity-wise, should be taking the same track, because there just isn't enough inflation to drive further. And you can see that from its sell signal, it just broke down below the ABM, and it's just continued. Pretty clean depictions. Here it was from the 5K chart. So we had that choppy action, but when we were talking about, hey, this doesn't look good, we've also had the dip below the red line that was all the way down at this previous gold candle. We shot up, and then sure enough, right as the pre-market opened up, early spike, but then it just boom all the way, and then we started creating new lows, even though we were starting to get some of the additional pivots, but no resets of buy configurations. Gold down at the zero, yes, those pop, but you look for your first opportunity, which didn't take long because the orange moved above right about there, but the green was still ahead, and it wasn't until right here that it flipped around, and then sure enough, boom. This actually produced fairly decent pivots. Orange was just right below there, even before the green had crossed, so it was a little bit more of a delay. It wasn't until the green crossed over, but didn't produce a whole lot, which is exactly what you would expect when you have no orange. And boom, made new lows, did the same thing again with no orange, and sure enough, finally you did get the orange production, but it was a little bit later, so the orange popped back over here, but then produced itself right above the 23%, which is kind of exactly where you look at to see that. And that produced a nice spike, beautiful 50% retrace, found support, and the pre-market, boom, that's where we're at right now. Let's just zoom in so you can get a clearer idea. It makes it a little easier to visualize all that quick depiction of it. But right in line, so maybe we get a little bit of a 50% off this 50% move, which would take us right around that 83 range again before the potential. But even if this retraces further than we're seeing right now, in actual market open, the attempt is going to be to retrace those highs. So that will be a pullback of at least half of what was given up before. So the ebb and flow of it, gotta love it, but still the bias is generally to the long side simply because of historical, but the daily is not giving us that reading, so we may see a bunch of chop going in between, which is fine. Just play it like it is. As always, though, I will put up anything relevant that pops up on the Skype chat and continue to ride the good action. But it's a clear indication, though, now that we're getting into some of this back and forth, that unless you're just going to try and ride the swings, you've got to have the indicators here to be able to see when things are going to start to phase. And it becomes a question of, at any point you could get the readings that start to say, hey, there's a significant enough of a slowdown that growth, at least for business or whatever, is going to be impacted. Obviously the tax cuts and that help, especially going into year end and that. But anyone who's missed any part of this move, or if we continue to get a quick move up towards Thanksgiving, could find themselves behind and needing to buy just to window dress. So that could create some really interesting and unique dynamics, which it's always fun. Trade well. We'll talk again later.